Hello, and welcome to the BioSyent Inc. Q4 and Fiscal 23 Results Presentation. My name is Rene Gorham, and I'm the Chairman and CEO of BioSyent. I wanted to start off with a disclaimer just to remind the listener that this presentation contains forward-looking statements, and BioSyent does not undertake to update any of the presentation if results do vary from actual results vary from forward-looking projections in this presentation. So 2013 was another exciting year for BioSyent. We finished the year with sales of just under $7.8 million, which represented a 55% increase over just over $5 million in 2012. In the fourth quarter of 2013, our sales exceeded $2.14 million, and that represented a 61% increase versus the Q4 of 2012. So sales grew strongly for the year and continued their momentum in the fourth quarter. On the next slide, I wanted to just talk through some of the growth drivers for the business during the quarter. So the FeraMAX brand continues to grow. FeraMAX 150 itself was up 11% sequentially. That is Q4 versus Q3 in units. FeraMAX powder, although off of a much lower base, significantly, in fact a small base, had its business more than double in the fourth quarter versus Q3. And in the case of both products, we set new monthly all-time sales records. Cathogel Jelly 2% units were up 82% sequentially, and this represented a sharp move for the second consecutive quarter on Cathogel. Overall, pharma sales exceeded $2 million in a quarter for the first time ever, and we all of these sales achieved with very little input from the legacy product business, as we don't expect much typically from that product line in the fourth quarter of the year. On the next slide, just as a recap going back to 2010 with the sales growth of the company, and you can see that in the 4-year period ending 2013, our compound annual growth was 67%. So our business has progressed nicely from 2010 through the end of 2013. Over that same period of time, on the next slide, you can see the net income before tax for the 12-month period ended has grown very sharply from just under $50,000 in 2010 to just under $2.5 million in 2013. As you've heard me present before in the past, this is an important measure for how our business is progressing, because we were not tax paying until the very end of 2012. And I'll get into a little bit more comments about the tax situation in the company. But when you're taking a look at the performance of BioSyent, be sure to take into account the variations in tax expense during 2012 and 2013. So in its most simplest form, if you just take a look at our sales growth and then look at our ability to generate pre-tax or net income before tax, you can see that number has progressed very nicely over the last 4 years. On the next slide, you'll see that we outline our pharmaceutical product sales growth. Now, happy to report that we've now got 17 consecutive quarters of growth, and in fact, Q4 dollars were up about 15% versus Q3 on the pharma business. Just another look at our revenue mix by business. That's on slide 9. You can see that over the time that our pharma business has been growing, its share of our total revenue has been growing dramatically, and so we've gone from being focused on or at least a large chunk of our sales coming from the bio-friendly insecticides business has now gone and flipped around the other way, where 89% of our sales are in pharma and only 11% in the legacy business. So I want to come back to this question about profitability and tax. So This chart on page 10, there's a lot going on, so just kind of bear with me. Net income before and after tax. So this is a look at the fourth quarter of 2012 and the fourth quarter of 2013 in comparison, and then full year 2012 and 2013. And what we're looking at here are our net income before tax and our net income after tax. So once again, as I mentioned before, the company had significant tax loss carryforwards and did not start expensing tax until the fourth quarter of 2012. However, in that year, we had a large accounting for deferred tax credits that we had to take into income, and so that you can see that our net income after tax was actually significantly greater than our net income before tax, and that's the impact of the deferred tax credit of $232,000 in that quarter. In Q4 2013, we also had a deferred tax credit, and but it was a much smaller number for this year. It was $123,332. So there's quite a variance in those deferred tax credit amounts, and in fact, both of these figures are for the full year, but they were only taken into account in the fourth quarter of the year. So they do skew our numbers in terms of performance quarter over quarter, 2013 versus 2012. In the case of Q4 2013, you can see that our profit before tax, or net income before tax, was $619,000, which was up 71% versus $361,000 in 2012. And then, of course, this after-tax calculation with deferred tax credits shows an increase in net income after tax from $503,000 to $555,000. It is a bit misleading, and encourage you to dig into the MD&A. And in fact, if we were to normalize those numbers and take the effect of the deferred tax credits out of both of those periods and just look at our net income after tax without the deferred tax credits, our net income in Q4 of 2013 would have been up 59% versus Q4 of 2012. On a full year basis, our net income before tax are up 75% to $2.45 million, and on an after-tax basis, we were up 25% to $1.928 million. On the next slide, we have a balance sheet snapshot. This is a slide that we've used in other presentations. It just helps you follow along our growth in cash and cash equivalents. As of December 31st, 2013, we had just under $4.4 million in cash and cash equivalents. And then, of course, no long or short-term debt, and you can see our total equity growing nicely now to just under $4.9 million as of December 31st. On the next slide, just a quick look at our operating expenses, and once again, we keep our eye on the ball in terms of what our OPEX is relative to the growth of the top line in the business. We're committed to growing our business profitably, and we watch these measures carefully. So for the quarter, 2013 fourth quarter versus 2012, our OPEX increased 50%, and that's in contrast to a sales increase of 61% in 2013 versus 12. On a full year basis, our OPEX was up 43%, in contrast to a 55% increase in sales. On the next slide is just a quick look at earnings per share as at December 31, going back 2011 through 2013. Once again, this is also impacted by the tax story of late 2012 and then mostly 2013. When you're comparing, you're not really looking at apples to apples. Needless to say, our full year 2013 earnings per share was 14 on a basic and 13 cents diluted. For the quarter, fourth quarter, that was 5 cents basic and 4 cents diluted. So for the full year 2013, we had a 4 cent a share tax expense that you should take into account when you're looking at these numbers. So subsequent to year end, we just recently announced the in-licensing of a new gastrointestinal health product. That's with an existing European partner. This is our third partner from Europe, and in fact the same partner as the women's health product that we've got in the queue to be launched in the second quarter, kind of later in the second quarter of this year. This new gastrointestinal health product has already been approved by Health Canada. It is complementary to existing promotion targets, so there's some efficiency with our existing sales team to also be promoting this product to their customers that we're already calling on now. And we're planning for a launch of this product in the fourth quarter of 2014. To assist with that process, we've just gone through a recruiting process to hire 3 new medical sales representatives. And in fact, they'll all be starting towards the end of March. Also, subsequent to quarter end, we announced that Steve Wilton had joined our board of directors after a 28-year pharmaceutical career with AstraZeneca and Eli Lilly. We also were named again to the TSX Venture 50 top ranking of TSX listed companies, and we in fact were the only one of over 2,100 TSX Venture companies to be named as a top performer for 3 consecutive years. The last slide I wanted to walk you through is what our product portfolio looked like today, and this is a graphic that we've shown before. It just highlights the 6 phases from in-licensing through maturity. We now have 2 products that we consider to be growth products. That would be Ferramax 150 and Cathogel Jelly. They're of course in the market and they're in the growth phase. We consider a product to be a growth phase product if it grows in a given year 20% or more. And of course Ferramax powder is in launch phase. It was launched in May-June of last year, so it's still a launch phase product. So coming in behind on this graphic, you see highlighted in yellow then, we've got 2 new products. One is a women's health product and the other is a gastrointestinal health product. The one slotted for a Q2 2014 launch, the other one for Q4. And then in addition to that, we have 2 urgent care products, which we identify here as product number 1 and product number 2. These are products to be used primarily in and around the hospital. These are with Health Canada now. One of them is progressing nicely in terms of approval process, and we expect, certainly Health Canada has indicated to us that we should expect somewhere late in the second quarter approval. And the other product, they did have some questions, which we are in the process of coming back to them with some answers, and we expect that to be later in the summer to get approval. So we're not sure that that'll give us enough time to get the product produced and in the market this year. So at this stage, we're calling for 3 products to be launched in 2014, and that would have one of those products slip into the beginning of 2015. So 3 launches this year and 1 at the very beginning of next year, but that would make 4 launches in the next 10 months or so. So that's a look at our product life cycle. I just wanted to point out to you, if you were looking for some additional resources, you could visit bioscience.com, cedar.com as well for all of our regulatory filings. Quote on TMX Money. We've got product website, ferramax.com and cathogel.ca. We appreciate your interest in our company and look forward to reporting on further progress as we move along. Thank you very much.